When people ask you how much you need to buy a house,
You to feel really good about pulling the cash out of your account.
yeah. So, Isaac, we're talking today. Thanks for doing another one of these with me. It's always exciting
Yeah,
when you're meeting with people who want to buy a home, because they're calling you to buy and sell, but you're
yep,
people that want to buy, specifically your first time home buyers.
yep,
We've talked a lot about down payments,
yeah.
right? When
Always.
people ask you how much you need to buy a house, what are some of the things you say to them, and what are some of the ideas that they have about what they truly need to buy a house? What is that down payment they tell you?
Yeah. And that's a great question because a lot of times, well, I mean, it always ends up in that space of depends, right?
Yeah.
What you want to buy, what you qualify for, stuff like that. The two things that I ask is how much have you saved up to buy a house, right? Because it comes into the down payment, comes into the closing costs. And then I always ask, well, what does this house look like and where is it? So that way we get an idea of where the price range.
Yep.
But when it comes to the specific dollar amount, um, I try not to go into, most folks get into the percentages, but that doesn't always equate to what can I do.
Well, exactly, because not everybody is a walking calculator, right?
Yeah,
So you're not saying, yeah, it's 3%.
and we're looking at a house and the house is priced at 369.9. Well, what's 5% of that?
Yeah.
Right?
I don't
So
know.
we go the other way around, and that's where I ask, well, how much have you got saved up towards buying this house? And if
Yeah.
you tell me, well, I've saved up, I've got $12,000. Perfect.
You can buy a $300,000 house.
You can buy exactly. You can buy a $300,000 house. And then that's where I like, hey, what did Huddy say? And so the question is, if I've got somebody that says they've got $12,000 squirreled away towards buying a house, what are you telling them with that same dollar
Loaded question,
amount?
because then we would be talking about maybe some different loan programs.
Okay.
And some of that is can be based on income
Yeah.
too, with what they qualify. Two quick examples though. I always think percentages because I'm a mortgage guy, and that's when we're talking loans, internally we're talking what is the percent down? Always percents. Even we'll phrase it calling it the minimum required investment is
Ah,
another spin
yes.
that we talk about. They call it your money down. They call it your investment, right?
I want you to feel really good about pulling the cash out of your account.
Yeah. Yeah. So minimum down payments, a lot of times when I'm talking to people, I'll give it as a percent, and I
Yeah.
will also give it as the dollar amount. And I use 300,000 a lot because it covers our area a lot.
Yeah.
Your first time home buyers now, it's kind of a $300,000
Yeah.
house. It doesn't matter the area that you're in, like where I live. I mean, you
Yeah.
can still find a house for 220 and it's
Yep.
awesome, right? But people understand 300,000. So depending on your program, if you're FHA, that's 3.5%. But if I say 3.5%, huh?
What does that mean? Yeah.
So
Give me a dollar. Give me a
yeah,
homework help. Give me a dollar to shoot for.
right. So I say it's 10,500 if we're using an FHA loan. And a lot of times people equate FHA loans as a first time home buyer loan,
Hmm.
and it's not. It's a anyone can use it loan. Doesn't matter your income. You
Yep.
can make $1 million a year and still use an FHA loan. But there's other programs too where, depending on where the house is and where your income is, it could be less than that. It could be a $9,000 down payment,
Okay.
which is 3%.
Oh,
right?
sure, sure.
So I tend to talk in dollar amounts and then also saying what that percent is. And the reason why I explain it that way is oftentimes the house isn't just 300,000.
Correct.
You
Correct.
know, it might be 310, it might be 275,
Yep.
whatever that range is, but if you give a dollar amount for that range,
Yeah.
you're close and it allows people to, it's like it turns it more tangible
Yeah.
when we talk dollar amounts versus percentages.
Yeah. Because I can look at my bank account, I can where I've got the money squirreled away, where I've been saving it, and I can
Right.
see, okay, if it's $8,700 in there, I'm $1,300 away from this goal, for example.
Exactly. And then you're thinking, well, if Uncle Jim puts the liquor down for a couple weeks, he might lend me some, or actually, let's have him drink a little bit more and he'll for sure give it to
Until
me
he says
and
yes.
forget he ever gave it to me. Right.
There you go.
So we talk dollar amounts oftentimes with people. And it was interesting that, and I think it's good we talk about this now because I was on a phone call this morning
Yeah.
with a father
Okay.
who is buying a house with his daughter and his son.
Okay.
So the entire family is qualifying together because they want, so it's multi-generational.
Oh, sure, sure.
They want a bigger house
Yep.
because they want a better neighborhood, they want better schools for
Yep.
the kids, and then grandma is also there for when the kids get out of
Oh,
school.
yeah. Yep.
Grandma's there because all the parents work,
Yeah.
right?
Yep.
So in their price range, they're like, hey, what does our down payment look like? And in, and I said, well, it's 5%. He says, okay, what's 5%?
Yeah.
So
What? Yeah.
I caught myself again
Yeah.
just throwing out a percentage because I'm so locked into that. And I'm
Yep.
like, oh, it's $30,000.
Yeah.
So I was able to give him a dollar amount. And he says, okay, so if I have some of my own money
Yep.
and my son has, and his wife have some of his money, and my daughter and her husband have some of their money, can we pool that together for 30,000? I'm like, absolutely, you can.
Yep. Yeah, because
So
that's the other thing. It's like, well, just because it's 5% down doesn't mean you come up with 2% or like don't work in those numbers. Let's talk about actual dollar amounts.
yeah, how much does each person have
Yeah. Yep.
versus the percent? So it's pretty cool because he's like, well, I know I have 10
Yep.
and I don't know how much the kids have yet, but I know they've been saving.
Yeah.
So as long as we get collectively 30,000 together, it doesn't matter who it comes from. Like,
Yeah.
no, doesn't matter. And if you need to get that gift from Uncle Jim after he sobers up, you can do that as well. So it's pretty cool
So so if
working that way.
in that scenario, all three of them have to be on the paper or
No,
okay.
no, the father went through some hard times with his job and different
Okay.
things. So he's the dad's back working now,
Yeah.
but his credit really got beat up. Financially, he can contribute to the mortgage payment,
Mhm.
but for qualifications right now, he's not going to work. But his son and his daughter both have good credit, both have been working. So to buy this $600,000 house, they all the son and the daughter qualify.
Yeah.
Dad doesn't, but that's okay
Yep.
because neither son or daughter want that payment by themselves.
Yeah. Yep.
So everyone's going on the title because everybody's contributing down payment and monthly payment wise.
Okay.
So it's pretty cool. We have three families on the title of the house,
Yep.
and then just son and daughter are on the actual mortgage note. So it's awesome to be able to look at the goal of what they're trying to do and
Yeah.
say, well, let's just do it this way. We can add whoever we want to the
Yeah.
loan.
Yeah.
That's fine. As long as they qualify, let's add them. So it's kind of like these days, it's like mix and match who's buying, if you're
Yeah.
living together, you're mixing and matching your people who can qualify to make that
Yeah.
transaction happen to reach their goal is what we're doing.
Yeah.
We figured out a way for these people to accomplish what they wanted to do.
Okay. I can dig that.
And they're buying this big house, and the daughter, she only has a 625 mid score,
Oh, okay.
right?
Yeah.
That's the other thing. So her scores are a little beat up
Yep.
at 625, which is still works.
Yeah.
Brother's scores a 700,
Yeah.
right? So together, it's really easy to get them to qualify for conventional financing. Because
Okay.
that's the other thing is people think that credit score is just magic
Oh,
to
yeah.
get you. We look at many different things just besides the score. That's why I encourage people, if you have a 600 score, it doesn't automatically mean that you're going to qualify for a loan, but it doesn't automatically disqualify you from a loan
Yeah.
either. Because we do look at things. You working? You got a couple bucks? What do we got cooking here? What's going on?
Yeah. Well, not to mention that me as the consumer, if I think I have a 600 score because I was looking at Credit Karma or freecreditreport.com, it doesn't mean what you on your side of that screen sees as a 600 score. I might show up for you as a 628.
You might, yeah, absolutely, because the credit scores that we pull are different than what you see online.
Yeah. Yeah. There's a little bit of myth conception out there about that. So.
There is a myth conception. Okay?
Well, good.
Yeah.
Wrapping this up, if I were to stack that, or can I stack that 10,000, let's say the 10,500 and still get a grant for payment assist, or not down payment, but like closing costs?
Yeah, absolutely. Just depending on what each person qualifies for,
Yeah.
we have so many different programs that work that, yes, if you have some money, awesome. But we can also stack grant, down payment assistance. The down payment, all that stuff can be confusing. So I won't go into the weeds on it because there's a lot of different programs and people will try to research them, which I commend them on, but they don't know if they work, if they fit. But to answer your question, yes, you can stack down payment assistance, grants, and your own money together to try to make a good purchase on a property for sure.
Leverage.
Leverage.
Man.
Yeah.
All right, man. Thanks.